And we're here with the biggest stories in the crypto space. I'm Matthew House Barbie, and as always, I'm here with Austin Knight. Austin, it's been a pretty crazy 24 hours. I imagine more so for you in the US.
Yeah, I think that we usually start off these episodes on a pretty high optimistic note. This is the first one in the 7 or 8 years that we've been doing this where I I am struggling to be the kind of force of optimism that I really love to be every day. Um,
Mm,
you know, it's so bizarre, Matt, right? Because today is the 24th anniversary of September 11th.
right.
And yesterday on September 10th, Charlie Kirk, one of the most significant conservative political voices in the United States, perhaps in the world, was assassinated at a rally, as I'm sure everybody listening, or not at a rally, rather at an open debate
Right.
event with college students, um, as I'm sure everybody listening has heard, and it's on September 11th, I'll never forget it. I was in third grade,
Hmm.
um, and the teacher rolled the CRT TV into
Yeah.
the classroom, and the principal comes over the announcement and is like, "I think we're gonna have to send you all home." And there was just this overwhelming, eerie feeling that I got from
Yeah.
that I haven't felt since until today, or really yesterday, actually. But
Mm,
it's really, really setting in today. It's just very bizarre timing, but also just the significance of an event like that. And the fact that, he was my age. He had a wife, he had two kids that he's leaving behind. God rest his soul and watch over his family. Um, and he was just a man like so many Americans that believed in free speech, open debate, peaceful engagement. And so it's a shame.
yeah.
I think back to um, in July of last year, there was an assassination attempt on the front runner uh, for the presidency when Trump was shot at a rally. And then actually, there was another assassination attempt on him September
Was it that golf
15th of
course,
last
wasn't
year.
it? Yeah.
Yeah. So you got September 10th, September 11th, September 15th. And then I also thought back to, I don't know, you may remember this, Matt, back in 2017, there was that congressional baseball shooting,
Yeah, I
which
remember.
was,
Because I was living in the US at the time, actually. Yeah.
yeah. And so, look, I'm not very good at interpreting charts or white papers or technical data or anything like that, but I do feel like I have a pretty good read on American sentiment, what the average
Mm,
person thinks. And I think that this helps you understand what's going to happen with the charts or as a
yeah.
result of the white papers or why the white papers might exist. And um, a lot of people are calling this the most significant political assassination since MLK Jr. And I actually don't think that that's hyperbole. I know that that might be hard for people to understand on a universal level.
Yeah.
This person spoke deeply to young people. He was the person that was going and engaging on college campuses. And I I don't quite know. I feel like I'm what is the sentiment?
Mm,
My barometer is not clear, but maybe that's just because I'm not one of these young people. But what I do know is that it's serious, especially for them. I think for your average American, it's serious, but I think it's especially serious for young people who, by the way, from the 2022-23 midterms to the presidential election in 2024 swung from majority Democrat to majority Republican in a net 44-point swing.
I
Um,
think it's fair to say that in the past year in particular, the past 12 months, actually, no, I think the past two years in particular, we've seen probably the most aggressive swing in young people's, I don't even want to call it voting I guess like political philosophy towards conservatism that I would remember from the time I would remember these things.
Right.
And I think with this particular uh, assassination, I, I I always think in situations like this, it actually doesn't matter how you align with that person's politics, whether you align with it or not. Um, the this kind of this kind of act only fuels really bad outcomes. And if you believe that anyone should have the right to share their view within the remits of like, typical like hate speech, etc., this is an attack
Which
on
doesn't
that.
exist in the US.
For sure,
we
for
have we
sure.
have free speech.
Right. And
It's
well,
it's
I
a
think
it's a
like
First
but
Amendment
even
right.
if you for sure, and I think even if though you feel like there are parameters to it, this is irrespective of that. This is an attack on a belief system, and
Mhm.
I just can't quite understand. We don't know who's done this, the motives, etc., and I don't necessarily think I'm the right person to be kind of pontificating around some of this stuff anyway. But there's no good that comes from this in any way, shape, or form. In the exact same way that if, regardless of what you think about Donald Trump, if he'd have been assassinated, there's not it is not good to smother a political mouthpiece in that way, right? Like you want to create change. This is not the way you go about it in any way,
Yeah.
shape, or form.
When in the free marketplace of ideas. Uh,
Hmm.
Nevertheless, I was just so encouraged to see um, business owners weren't boarding up their businesses last night. Cities didn't
Yeah.
burn. Riot police weren't being called out, which you can juxtapose that, I think, to a few years ago. There were candlelight vigils and prayer last night for Charlie Kirk and for his family and for people that knew him, which I think was beautiful. It's a beautiful reaction. That said, one thing that I do feel on the sentiment front is like, I think that in the US, and maybe this could be more broadly extrapolated across the world, I'm not totally sure, but I do think that in the US, the left tends to operate kind of like a knob. Like they have been steadily cranking up the rhetoric and tactics over the course of the past decade or decade and a half. I think that the right is a switch. And I don't know if a switch was flipped last night necessarily, but I don't think the knob should be cranked any further than where we're at now. So it's hard for us to like record an episode about crypto and everything like that in light of this. But one of the beautiful things, about this country is that it forges on. And so that's what we're going to do today. I think that's what I'm definitely prepared to do. You're prepared to do, Matt. But I did want to address it at the top of the episode because it's a horrible event. It's also I think a very important moment in American history, which is why it felt like a 9/11 to me, like in my gut. It's a weird feeling. I don't like it. So
Yeah, it's hard to get the kind of sentiment from where like I am, right, over in the UK. Nowhere near the kind of same level of influence at a global level, right? And I think seeing the news last night, my initial reaction was, oh shit, there is going to be riots in the street. Things are going to get really, really bad. I think if there's any positive that I will take, like you said, that hasn't happened. It is still early days, but it doesn't feel like that is necessarily what's coming. I guess we'll see, but it does feel slightly different. But as you say, we will we'll press forward. I know like we wanted to kind of touch on it. At least it's incredibly significant. And even in the role of like markets, etc., this is a significant event. But the to move on to clearly less important matters, but important matters all the same. Um, this week has been packed full of really important market and economic data as well.
Yeah.
We knew last week we had really important information coming out around the non-farm payrolls and the state of the U.S. economy. Some of the revisions down. Non-farm payrolls coming in at around 22K at an expected 75K, which was already quite bearish, was a shock. And some of the revisions down from earlier in the year have really put the conversation back to has the US economy actually ever been in the good, strong, steady shape that we actually had thought for a while that it was? This week has been about inflation, the other side to the coin. And yesterday we had PPI come out, unusually before CPI. And there was a pretty significant downside surprise. In fact, it reduced, it declined month over month by 10 basis points, which only happened once this year. And we were expecting a 30 basis points increase month over month. So I think everyone was looking at that and thinking, okay, the economy is looking really bad. Inflation doesn't seem to be looking that bad, but we've just had the most important measure come out about 2 hours ago, 2.5 hours ago, which is CPI, which really is what we want to see, is like how much is inflation filtering through into consumer prices. And core CPI was basically at expectation. So 0.3%. CPI outside of just core was marginally above expectation, but I don't think only by 10 bips. Nothing I think that would be too worried about. And then we had jobless claims, which we get every week, come out alongside this with its highest increase in 4 years, which again is just like, we've talked about this quite a lot, is like all of this sounds a bit like stagflationary, but inflation not quite as hot as what we thought. But it feels like at this point, 25 basis points cut is about as certain as it's ever been. I think if we had a downside surprise on core CPI, we'd be having a different conversation. We'd be saying, will they do 50 bips? I'm not sure. I don't think that's happening. Looking at the Fed Watch, Fed futures yesterday, it rose on PPI to around 10% chance, and then it's dropped back down to about 8%, at least the last time I checked about an hour ago. So I think that's where we're heading. And it feels like if inflation remains under control, we should be in for successive rate cuts. I think the market's pricing a minimum of 2 right now, probably
Yeah.
3.
Mm-hmm. Yeah. I mean, okay, so PPI came in softer than expected, but inflation is sticky in housing and services, right? And
Yeah.
here I go on my soapbox about housing. But as I mentioned, in last week's episode, I do think that cutting into that backdrop, like cutting rates into that backdrop, it does risk repeating that sort of 1970s stop-go cycle that I was talking about in our last episode, where markets want these cuts. It may not result in the economic growth that's expected. It could even lead to stagflation, and then you kind of get in like cut, stop, tighten, cut again cycles. And so even though a September cut is being treated as pretty inevitable at this point, I know that last time we were pretty sure it's like definitely 25 bips. Now there's like maybe a little bit of potential for 50, but still leaning 25, and then we're looking at another cut by year end, maybe even a third. I still remain skeptical in face of all of this. By the way, despite the fact that I personally stand to benefit from it, like my crypto portfolio stands to benefit from it. From a career perspective, I stand to benefit from it because everything
At
that
least in
I
the short
view.
term.
Yeah. I might be like, I might be automated out of existence, in the long term. But nevertheless, I think that the labor market revisions, nearly 1 million jobs, like 900,000 jobs, were overstated.
Mhm.
They do raise some questions about the health of the economy, and I don't know. Are we in some type of like a silent stealth recession or something like that? It just feels weird to me right now. But at the same time, from a crypto perspective, I mean, Bitcoin dominance is climbing, right? And in past cycles, that was a precursor to an alt season, I guess. This time might feel a little different. Uh, ETH is lagging. So, what do you think? What do you make of all of that, Matt?
Yeah, I think, if so my view is that, so I know you're skeptical around the cuts there. I have a different view. I think that the Fed is absolutely willing and is going to run it hot. They are going to cut into inflation, even if it happens.
Okay.
And I think we will see inflation pick back up. I think it's worth thinking about the dynamic of the Fed here. So, first of all, the this next week's FOMC meeting is going to be really interesting, and I think that seeing how many people vote um, for and against, and to what extent of the cut is going to be quite telling. But they're going to be worried about the jobs data, very worried. It is the non-farm payrolls number was unbelievably low. So low that, like, going into that number, a downside surprise in payrolls numbers versus expectation was seen as bullish, right? Because we were like, yeah, we lock in a cut. It was so low that it was viewed as slightly bearish, because it was like, holy shit, this is actually so bad that this could impact like consumer spending to like levels where it's like, are we worrying about a recession? Inflation is kind of just ticking along. It's actually not at a crazy concerning level. And the Fed in the Jackson Hole meeting, which we talked about, Jay Powell, who, he's a lame duck right now in his role, is going to be replaced in January with a much more dovish chair as well, knows that there's a lag to this and they need to take evasive measures. I don't think it's actually even out of the realms of possibility that we see a 50 basis point cut at some point this year.
Wow.
If jobs continue to decline, and the only thing that's kind of like the argument against that is that unemployment rate is still not crazy high. But if that starts to tick up, and it's a steady grind in that ticking up, and looking at the jobs data, you would expect that to happen. And if inflation remains even just like neutral as where it's going right now, I personally think they kind of have to do something here, because otherwise they're going to be late going in. They're going to be late to lower as well. Now, what does this mean for the markets? So I think it's interesting. I was on a live stream with an incredible trader last week, Trader Main, and we were talking a little bit about, like, when is the alt season coming? And everyone always wants the alt season, but when you look back at the alt season, it's always the last hurrah, right? So like, it is kind of a sense of like, be careful what you wish for, because generally speaking, when we do have an alt season, it's pretty much signaling the end of the cycle, right? Like, if we look here, let me just like screen share a second. Let's get something up. If I can fumble around.
By the way, Matt, I've been loving your live coverage of Fed meetings on Twitter.
Oh yeah.
You're like...
What an interesting guy I am.
I mean, it's been fantastic insight, but it's also just kind of everything that I hoped you would become at your...
Yeah, give me 10 years, I'll be insufferable. No one's going to speak to me at parties.
Golfer. You're a golfer. I think your British accent has gotten stronger. Pretty soon you're going to be growing a mustache and
Yeah.
wearing a fancy hat. You're following Fed meetings. I
I'm going to be
mean,
a
Matt, you're
stately old gentleman. You'll see me with a pipe soon. Yeah, I really am the life and soul of the party. Um, and speaking of that, but the thing is, macro is driving markets right now, way more than micro. And like, look at this, right? BTC dominance. Um, you know, it since we saw this reversal in ETH really leading the market, BTC dominance is like tanked. And we've seen these like resurgence, kind of what you want to see here, right? As we get to this stage where we've been chopping around a little bit, is actually you do want to see some BTC dominance like run
Mhm.
back up, because typically the way this is like it says the market's got legs, and BTC has another big run. The inevitable rotation happens into ETH, which is what we saw here. It's like we've had some pretty incredible dominance happen all the way through from the end of last year and start of this year. Lost a bit of steam, rotation into ETH happens kind of in this chunk here. And then what we start to see is the rotation. We saw Sol even like picking up some steam with a rotation out of ETH into Sol. Now we kind of run that playbook back again. Is like, typically, if we think that we're in the last innings of the cycle, that's the way that this will usually work. And if we kind of take a little look at the Bitcoin chart, you can kind of see right now, like this is just the one day. Initially, like we've kind of been chopping around a fair bit. Let's zoom out a little bit into like the 5-day. We've we've had a few nice layups, but it's just been a lot of uncertainty. I'm really unsure about what's going to happen next week at the rate cut decision. You got to think it's kind of priced in at this point. But usually post rate cutting cycle starting, there's usually around a 2 to 3 month lag anyway before we see a really big run that kind of happens there. So I think like what we want to see is BTC see some strength, catch a bid, break through like some big areas of like resistance that it was hitting, reach new highs, see the same with ETH. And then when we get into the alt season, usually it's a very important time to start assessing, are we in the last innings, and am I positioned for that? Um,
Uh-huh.
and I think the biggest worry probably for people on like the macro side is if inflation really does pick back up coming into next year, there'll be a lag until we see the effects of that. But I think every Fed meeting until the end of this year, at least, we get a rate cut moving forward. And I don't think any inflation data will change it unless it's something absolutely wild that happens. That's my view, at least on all of this. Let's chat about some micro stuff.
Okay.
So Hyperliquid, I think I shared in one of the recent episodes that Hyperliquid has the highest revenue per employee of any company in the world, which is unbelievable.
That is incredible, yeah.
It's phenomenal. And they are becoming an absolute force in the crypto space. I mean, Hype, the token, most of Hyperliquid's revenue that it's generating goes straight into token buybacks. The chart is just straight up and to the right. And this is like a top 20, sometimes top 10 token by market cap. So it's pretty incredible. They're launching a stablecoin, and this is really significant. We talked about stablecoin season a few months back and how that's kind of the big meta. Hyperliquid, and I'm not sure if you've played around on Hyperliquid before, Austin, but basically like to fund that, it's an L1 to fund your Hyperliquid wallet. You can do it through like an EVM wallet, right? So you have to bridge USDC from Arbitrum. They have like $5 billion of USDC just sitting on Hyperliquid, which if you do some napkin math, This implies about 10% of Circle's business. That's around $200 million in annual revenue from the just from Hyperliquid that goes to Circle. That's very significant. They are going to be launching their own stablecoin, USDH, and I really think, I mean, this is set to rival USDC, and it's going to accrue a ton of value back into Hyperliquid, of which they've stated they're going to be using again to just continue like with protocol rewards, buybacks, etc. They put the big decision that they were making is like, who's going to be the issuer of this to support us on it, and they put this to a governance decision which they've been running in their Discord channel, which I think is pretty cool, where they got their validators. They have a smallish group of validators to initially vote on proposals that were put forward by each of the issuers in there. Could be an extremely lucrative deal for all involved, right? And the validators actually just voted a few hours ago, earlier this morning. And then the next step is that anyone staking in those validators then goes to like a vote, a final vote to pass through who will be the issuer of the stablecoin USDH. So the validator votes played out as follows. So there was a bunch of proposals that came in. The most notable, there's maybe four, but like the three that are really like in the running, you've got Athena with 2 validator votes, Paxos, as we know very well, 5 validator votes, and Native Markets, who I had never heard of, has 10 votes. They are by far and away the favorites here. You know, just Athena, obviously the creator of USDE. They have very successful, I think 2 or 3 stable coins actually right now, because they have that institutional one. I guess one staked. It's not really a separate one, but serious size. Paxos, probably the biggest of the bunch, right? They did USDG, which is like 550 million market cap, Binance USD, which is like 25 billion plus, PayPal USD, 1 billion plus. So they've got like 160 billion plus worth of stablecoins that they've issued in circulation. That's a lot. Now, native markets, remember when we were talking about these DATs, these digital asset treasury companies? And I said, hey, there's this one DAT that's focused on accruing hype. And we didn't really talk about like the one that was like accruing hype because we focused much more on like BTC and ETH and some of the Sol ones. But the team behind native markets is actually the team behind Hyperion, which is the public company DAT that has been focused on hype. They've been huge players in the Hyperliquid ecosystem. And right now, I was just looking, let's just find, I had Polymarket up. You gotta love Polymarket for anything like this. Here's the odds on who's going to win. This is all playing out on September 14th, which I think is Monday. Native markets, 93.3% likelihood. Paxos at second with 3.9, right? So the thing that's kind of crazy, though, in all of this has been the terms that have been put forward. It's just been like these massive stablecoin companies basically offering anything possible to Hyperliquid to be their issuer. So I think like Paxos has said they would give like in just ecosystem incentives, they would give 20 million from PayPal. I think Athena offered 75 million. And then we had native markets where it's like a reinvestment of 50% of their revenue share just for growth in Hyperliquid. Native markets are using Bridge, the company that Stripe acquired. And in this, they get 50% basically revenue split to the foundation, and 50% of it goes to USDH growth. Even in like the Paxos deal, they're offering like upwards of 80% of the revenue back to Hyperliquid. So it's It's very favorable, and I think out of the gate, this is going to perform very, very well, and I think everyone can kind of see that. So I think it's super interesting to just keep track of where this is going. I mean, on the announcement, we had hype. Sorry, I've just shared the wrong screen. On the announcement, we had hype jump pretty significantly. Let's just get this. Let's go to hype. Hype. Show the purpose. Fine. You can kind of see. I mean, look at this chart. It's just
Yeah.
up and to the right, like consistently. But it's been performing very, very well, even on the 1 year, right? Like, we haven't got full 1 year here. So yeah, it's for a company in crypto in particular to be generating the kind of revenue they're doing already and building a stablecoin play. It feels like this is very bullish for that ecosystem. And you just can't see a world where they're not just going to be a continued major player in the space. I think that whole perps market on chain is heating up a huge amount at the moment as well because everyone wants to be Hyperliquid.
Yeah, so this is interesting, right? Like Circle's exposure is an intriguing part of this, with 10% of their USDC business concentrated on Hyperliquid. If USDH gains traction, that could be a threat to Circle's moat, right? I mean, it makes you
Yeah.
wonder if Circle might be more fragile than investors are currently assuming. But
Well, I wonder if what I don't know yet is if they're gonna say like, "Hey, you can only use USDH through Hyperliquid." I don't think they'll do
mm,
that, but I think they'll be. So I think they said there'll be like 80% lower fees using USDH. So I think for any traders that are in Hyperliquid, they're probably gonna just do that and switch over. But yeah, it could be a material dent to revenue.
yeah, it really could. The governance aspect of this is interesting as well, right? Because Hyperliquid is putting the USDH issuer decision to validators and then stakers. So this is like some pretty real decentralization, albeit messy. And then
Yeah,
you also have, you know, Athena, Paxos, native markets. They're bringing credibility in their own different ways. It's a political process, though. And I think
yeah.
from a bigger theme perspective, this makes you wonder, can markets really rely on governance votes for something as systemic as a stable coin? If it works, Hyperliquid will have basically flipped the script here. They were pulling power away from USDC while providing some DeFi governance that can allocate some systemically important roles. So
Yeah.
it's an interesting project to pay attention to. I mean, I feel like we've gone for years without really talking about USDC or Circle after several years of us speaking about them in every single episode. They've kind of
Yeah.
just become an incumbent that it's like, oh yep, they're always there.
Yeah, them and Tether, right? It's just like, these guys, like, they have a moat. It is incredibly hard to challenge them. I think maybe Binance came close at one point and then kind of faded off. But will this have the legs to challenge uh, the scale overall in crypto? Don't know. Maybe. I mean, once you hit a critical mass of adoption, that bleeds into capital markets,
Mhm.
and certainly across all DeFi. And very quickly, we could see this become, I think, almost certainly the number three stablecoin. Will they challenge towards number two? I'm not sure, but they kind of get a double whammy of hurting Circle, as well as kind of going after them. But
Yeah.
speaking of Circle, right? Big thing we were talking about with Circle was IPO and
Yeah.
all the stablecoin IPOs. Like we wanted to talk a little bit about the rest of the crypto IPO season that's really starting to heat up quite a lot right now.
Yeah. So Figure has just had a $787 million IPO. If you're not familiar with Figure, it's a fintech built on blockchain rails, not speculation. But their core product is home equity lines of credit, or HELOCs, that are processed in 10 days instead of the industry average of like roughly 42 days. If you've ever had a Helic before, you're familiar with how painful that process can be. So this prospect of being able to process a Helic in 10 days is really something else. And I think that that's where blockchain comes in. It enables faster settlement, transparent collateralization, and it's bolstered quite the IPO. They've also expanded into other areas like loan origination, loan servicing, private company stock trading, and some other things. And they have a stable coin as well, USDF, which ties into their sort of financial infrastructure. But the IPO was really
Everyone has a stable coin.
yeah, it's true. The IPO was really interesting to me though because they raised $787.5 million at a company valuation of 5.3 billion, and they were backed by some pretty major Wall Street underwriters. So this isn't just like a fringe crypto project here. And I thought, okay, well, could we get some comparisons to some of the big IPOs that have happened in the sort of crypto and fintech space? Okay, so Circle, they had a $1 billion raise at an $8 billion valuation. That was a big day one surge that they experienced. Coinbase had an $85 billion raise in 2021, but that was during the sort of like peak of all speculation. That was incredible timing on their part. Gemini, not the one that you're thinking of, the other one, they had a $433 million raise at a $3 billion valuation. Klarna had a $1.3 billion raise at a $15 billion valuation. So kind of where does this
Gemini's tomorrow, I think, actually, that it actually debuts, which is interesting. I think the thing that I would pull out on all of these, I can't remember Coinbase. All of them bumped up their valuation and their raise amounts prior to like listing. Like Gemini just bumped theirs up. I think they were going in at like a 1.5. Maybe I'm slightly wrong. Maybe they've even bumped further up now. They were looking to raise like 200 million. I think NASDAQ just did like a pipe investment of like 50 million in them. Same with Figure, bumped up. Like the demand right now for crypto IPOs, I think it's kind of strengthened. Like the Circle IPO earlier this year that just absolutely ripped, has got the appetite wet for all of this. Bullish was the other one recently as well. It just, yeah, it feels like everyone wants a piece.
It's true. So that kind of leaves Figure mid-pack. So they're big enough to matter, but they're priced a little bit more conservatively given just our current macro climate. Some thoughts on this. Okay, so I do think that this is crypto finally solving a boring but critical problem, which is consumer finance, which is nice to see. And I think that your average consumer isn't going to really care that it's blockchain under the hood. They're going to care that it's a lot faster than the current standard of 42 days. It's
pretty low bar there, isn't it?
I know that is true. Yeah. Hey, ripe for disruption, I guess. And it's also a lot easier to get a loan. So where does the risk come in? Because this has sounded pretty good so far. Well, I think that the risk that an operator like Figure would face is regulatory pressure from incumbents that are definitely going to fight back against this. I don't think that banks are going to just surrender their lending margins and their slow loan origination times very easily. So my bet is that if Figure succeeds, the big banks are either going to replicate their model, which would be a win for everybody, or they're going to buy them outright and kill them or something like that. So I think that Figure is a good one to watch. If you're in the market for a Helic, I'd be so interested to hear from somebody who has actually used this, like what the experience is like.
I think the comment that you made there is interesting around like what are the potential potholes and the incumbents, the banks, are they going to kind of fight against them? Are they going to try and acquire them? Is it going to be death through regulation? I think for a company like Figure and for many crypto companies, there's never been a better time to kind of take that risk reward, because the regulatory environment right now towards crypto is the
Mm-hmm.
best it's ever been. I don't know who will regulate this, whether it be the SEC or the CFTC, but either is going to actually be very amenable anyway. So I think we're seeing this with stable coins. And, go back a year or so, it was very hard to see how stablecoins could actually truly take on traditional markets for the exact reason that what you said is what we were saying back then. But now all the banks are issuing stablecoins. So they're like, hey, we're really far behind. Like, banks can't challenge what Circle are doing right now. Banks can't challenge what Tether are doing right now. They need their own stable coins, and what that means is that more retail consumers are going to get exposure to stable coins. We've already seen many central banks completely backtrack on their CBDC plans and saying, okay, we're not actually going to do the whole issue private wallets to people, and maybe actually we'll issue a stable coin that is actually decentralized but will be issued out, which is what we've been calling for. So I I I really feel like there's a potential here. I don't know enough about Figure's exact business model, but I think for when it comes to being disruptive as a crypto player coming into traditional markets, there's never been a better time to do it. And the kind of product that they serve is the kind of thing we were talking about back in 2021, 2022, as like the rise of DeFi and how native crypto on-chain loans were going to, really upend the traditional system. It was just a little bit too early, but it feels like now we're really going to start to see this happen a huge amount over the next 2 to 3 years for sure.
Yeah. I'm loving seeing these IPOs.
Yes, 100%. I think it also like really legitimizes a lot of the space, and I think gives some needed capital injection into very
Yeah.
lofty projects as well. But I just think overall, certainly I get a good view of this at Kraken, but also from where I'm geographically based, the difference between the regulation that we're seeing in the US versus the UK, Europe, and otherwise, it's like light years ahead. There's so much more stability to build. I think like the Genius Act in particular around stablecoins is a shining example of that versus what we've got in Europe with Mika. It's very, very different. And it's also one of the reasons why 99%, I think literally this is an actual stat, 99% of all stablecoins are USD denominated, which is kind of wild, really, like that we haven't seen a bigger euro stablecoin in particular. These are all definitely coming, but I think like the regulatory space in the US just makes it so much easier to do like what Hyperliquid are doing right now and others. And they have a stable ground to like build on, no pun intended. But like, so I think we're in a good era for innovation, and that's showing up in the IPO market. And the fact that the IPOs have responded really well is definitely helping in all of this. It'll be interesting to see how Gemini's IPO goes tomorrow. Bullish, another exchange had a much better than expected IPO, so we'll see.
Yeah. Well, until then, Matt.
Until then, yeah, rate cut next week. We'll have plenty to talk about. We will be recording the day after the rate cut, so that's kind of perfect.
Perfect timing.
And
Come on, J-Pal.
I know. Send us 50 bips. Send us to Valhalla, the promised land. Let's go. All right, man. Well, as always, it was a pleasure. And thanks everyone for joining us live. We'll see you all next week.